What is going on? I hope you're doing well. Now, in this video, I just want to quickly talk about entries, where to put your stop loss and targets. Okay, and it's very, very simple. Okay, and there's three different types of entry methods that we can use. Okay, three entry methods. Okay, the first one, okay, is going to be zones. Okay, same thing that we're doing, just again on a lower time frame. Okay, and I'll show you what I mean by that. The next thing is market structure break. Technically, there's four then: candle pattern. Then number 4 is the cloud displacement filter. Okay, now just between just the 4. So quite simply, this setup here we've got on the 4-hour on DJ. Okay, and if we cut down, if we first will go forward and then cut down to our middle time frame, mark out what's going on here. Okay, so I'm going to ignore the phases just for the purpose of this video. Let's just cut down to the 15-minute here. Okay, now the first entry that we can do is we can look for the same setup that we've looked for here, which is a strong drop, a base, and then a rally, and then a return. Okay, and so we see here we've got a strong drop here. Okay, we are looking for this to hopefully, looks like it is, form a little bit of a base. We're waiting for it to leave nicely. Okay, we've left fairly strongly and then come back. So something like this could be entry number 1, for example, if that's the style that fits you. In terms of targets, okay, we'll focus on more on that in a minute. We'll go to the middle time frame, and we're just going to mark out the next areas that we can look for. And ultimately, when it comes to targets, you can either target, in fact, no, I'm going to talk to you about targets in a minute, because right now, the main important thing is that you understand the entries. Okay, so we go back to a 50-minute. This would be entry 1, and this would be a zone entry. Okay, now, regardless of where the target is. Okay, now I don't know whether this is going to hit our stop loss or hit our target, whatever. Okay, we can see it came back beautifully into this zone, and then looks like it's heading up now. Okay, very, very simple. Now, the next entry. Okay, so we've done the zone entry. We just go back up here. The next one is the market structure break. Okay, and market structure is going to break one of two ways. Okay, if we're going down like this, we're either going to have a break of the trend, that's going to be our first notification, or we're going to have the last lower high in a downtrend broken. Okay, and retested like that. Okay, so we get notified here first, here second. Pretty simple, right? Okay, and so whatever your lower time frame is, simply wait for, let's just use the line in this example. So we can see here, this would be my last lower high. Okay, if it's not clear to you, go to the line chart, lower low, lower high, lower low. What do I do now? I draw it from the wick. Okay, this line. So we're waiting for this line to get broken in order, confidently broken and retested in order to enter. And it's given us pretty much the same signal that the last setup gave. Stop below the overall zone that we're trading off of. Remember, it's important that we are putting our stop below the zone that we are trading off. You know, so sometimes you're going to find, if you have a zone, sorry about the dogs, if you have a big zone here, but then as you've cut down the time frames, you found another zone within it here, okay, for your entry. When you enter, you have your stop a little bit above the zone that you're trading off. I mean, a little bit below the zone you're trading off, okay, not the overall zone, okay. That's if you're refining your entry. If you're just starting off and you just want something plain and simple, you can just use a candle pattern, but I'll get onto that in just a minute, so don't worry about that. Okay, so this would be the second way, and we already know the outcome of this. It's pretty much the exact same thing, just visualized in a different way. Okay, alternatively, for the market structure, you could have done something like this. Okay, waited for it to break, wait for it to return, maybe even draw a fib from the high, the low to the high, and then entered like that. Okay, there's loads of different ways that you can do this. Okay, so that's market structure break pretty much done. The next thing is the candle pattern. Now, in order for a candle pattern to be valid, you want to be using your middle time frame, not your lower time frame. Okay, because you're going to notice that you get loads of candlestick rejections on your lower time frame. You've got one here right in the zone, you've got one here, like they're, you know, they're everywhere. Okay, and you're going to get a lot of false signals. So in this case, we go to the 1 hour, and then we wait to be comfortably in the zone, and then we'd look to do something like that. And because this is the zone that we're trading off, just this overall zone, we're not refining it down like I spoke about a minute ago. Because this is the zone we're trading off, we're just going to put it a little bit below that zone, and then target, you know, we'll get onto targets in a minute. Okay, so pretty self-explanatory, right? So now this next method is probably the simplest of all of the methods. And if you remember when I spoke to you about the EMA cloud being a good sign of showing you displacement, okay? Very good sign of showing you displacement. Now, what this means is it means that when we see a cross in the moving averages, okay, it's showing us exactly where that displacement has happened, okay? And so we can see here the price hasn't actually crossed properly. Hopefully it will do it again. This is going to help us. We can see that it's crossed here, okay? And if we draw our zone around, oh, that's the wrong tool. If we draw our zone around here and look to get in right here, it's going to help filter out some of this noise, stop below this zone that we're trading off of, roughly this area here, okay? And then, target, whatever you're targeting, okay? This is probably going to be the most accurate way of entering, and it's going to be the best for beginners because it's going to help you filter out all of this noise. Okay, because when you wait for the EMAs to cross on your lower time frames, it's confirming that that momentum has really begun to shift. And we don't just enter when they cross like retail, we wait for it to come back to a valid supply and demand level where that displacement started. We enter off a candlestick rejection, stop below the zone, and then continue, trading to whatever your target is. Okay, so it's very, very simple, guys. Those are literally the 4 ways that you are going to focus on. Either have a zone, as I've shown you here, the market structure break, the candle pattern on your middle time frame, or the cloud displacement filter. Stops below the zone being traded. Okay. So take a screenshot of this, pause the video here if you want to do this, because I'm about to delete all of this stuff and move on to targets. Okay. So for targets. Now, when it comes to targets, it's going to depend on the type of trader you are, okay? And there's 2 types. We've got block to block like this, and then we've got the trend trader, okay? Now, the difference between these 2 is that a block to block is just basically using supply and demand on its own without any major directional bias in order to judge where price is going. You're not too concerned about predicting a whole swing. You're just interested in a little move. If we've got a zone here and a zone here, you're just interested in the little move between these zones. Now, this little move on higher time frames can be 60, 100 pips. Okay, so again, it's going to come down to your particular preference and how long you've got to spend at the charts. Now, the trend trader is going to do the exact same process, except they're going to take into account the overall trend direction if there is one. Okay, and instead of targeting the next block up, which let's say the next block up is here, they're going to look to target the old high. Okay. They're going to look to target the old high, block to block, trend target. Okay, so it's very, very simple. Okay, and so in this example that we'd had here, let's just go to our 15 minutes to make this clearer. We want to go to our, just put a rough zone in there. If we go back to our higher time frame, okay, and we look for where we want to put our target. Okay, generally speaking, if you are going block to block, target next block on 1 time frame below. Okay, so for example, a 4-hour entry zone to a 1-hour target zone, and this is just going to increase the odds, increase your success rate. The block to block methodology will have the highest success rate because you're not demanding as much out of the market and you're being a little bit more technical. Okay, so that would be the difference between, if we've taken this off the 4-hour, the next kind of major 1-hour block would either be kind of this area here, or you could even argue that it would be up here. Okay, whereas for the overall swing target for the trend trader, your target will be near up here, or maybe even the bodies of these candles up here. Okay, but you can see the difference that it makes, and ultimately it's going to come down to your personal preference, how long you've got to stay in the market, enter, and all these types of things. But it's very, very simple. Neither one is better than the other. They both have pros and cons, so it's going to be up to you which method you choose. Okay, so very, very simple, guys. And the reason, just to make this absolutely clear, that I've picked these levels is because if we looked at our indicator here, we can see that we've got a zone around here, and we've also got a zone around here. The reason I had this second one drawn on, probably more so than this first one, is because if we look at this first one, we draw this properly from the doji, we can see that we've already had a touch of this level. Okay, and so more than likely we're going to come up to the next one. Now, I don't know if we are, but I would imagine, yeah, okay, we are. And then if we'd held this to a trend, it looks like for a trend target, it looks like we would have reached that. Okay, so very, very simple, guys. Okay, so it just depends on your preference, how long you want to hold trades, and all of these types of things. So I hope that you've enjoyed that. I hope that it makes sense. Let me know in the group, and yeah, I'll see you on the next video.